Hello everyone. Today's Saturday, the 14th of May, and this is probably my first video I've done in about 2 weeks or so. So, been quite busy and been meaning to kind of show you a few things, but I just haven't had the time to really sit down and do it. But so this video is really I want to kind of put more emphasis on the S&P 500. Which is the index that tracks the 500 largest companies in the US. And I've got another video following this, which is kind of a general update on what's going on. So, but let's look at the S&P 500 now. Looking at the daily chart, and I just want to show you a few patterns that I'm seeing appear, and then we'll look at the weekly and the monthly because there's some interesting things happening and some things to be aware of. So what you're looking at there is the daily chart, and this is from the start of the year. Oh well, late Feb till now. And look, I'm not going to get into the background of all this because I've covered that before. So I really want to talk about this move here because there's a few things happening, and there's a few patterns that are starting to appear that are looking to start to play out. Okay. So I've said before that this level here was, not going to be exactly on the dot, but this level here was quite important, right? The 203 and 204 level. Now that's a major support level. There's other minor and major support levels underneath this, but let's look at this one for now, okay? So you got that level being pretty critical. Also, price being above both these moving averages, okay? Now, right now, what we see now, right, is we're seeing this kind of head and shoulders pattern. Now, I don't trade head and shoulders. I don't look for them, but it's just one of those patterns that I don't really look for. But this one stands out pretty well. So I thought I'd just show you what it's showing me, and if I can draw it properly. Like I said, I don't really trade these patterns, but what it is just it's a head and shoulders. So there's a right shoulder and a left shoulder and a right shoulder, and obviously in the middle being the head, which comes with the neckline there. Okay, and when you see these patterns, genuinely about most of the time, or probably at least 50% of the time, it will be a kind of a continuation pattern where price kind of completes the right shoulder, and then you see a continuation to the downside. Okay. So that's what we see now on the daily. Right now, has this completed? I believe it has. I might be wrong, but either way, we'll find out early next week whether this plays out. Okay. Now, if this plays out, if we do get the break below, right, and close below on the daily, then that's all bets are off. Basically, we're going to see more downside, probably a stronger move to the downside. You can see here, like this one back in end of December last year. As soon as we pretty much was sidestepping like this, and as soon as we broke this structure level here, it was all bets off. It was just going downhill from there. So we're seeing something similar here. Now, besides the one thing that I'm a little bit skeptical of about this pattern, right, is that a lot of people, from what I've been seeing, a lot of people seem to be talking about it, right? I believe it's been covered a little bit in media as well, which has me a little bit sus because usually they don't really talk about that stuff. So the fact that a lot of people are talking about it is got me a little bit sus, right? That this could be, we could see a false move, right? We could see instead of seeing it break down, we could see it move back up, right? Now, how high it goes up, I don't know, but we'll see what happens. The other interesting thing is that although we've had a bearish, we had a pretty bearish week, right? Wednesday, Thursday, and Friday. The market still closed. The market still didn't put in a lower low, lower close, right? It put in a lower close, but didn't put in a lower low, right? So you can see this candle. It closed below the previous close, but it didn't exceed the previous low. Okay, so for me, that's kind of indicating that we're not quite there yet. Right? If we get one more candle that closes below that level, then yeah, I would say that we're definitely in the we're looking. We're going to be heading down very quickly. But this tells me that we could see some upside maybe on Monday or Tuesday. Okay. Now, where it goes up, I don't know for sure yet. Like I can put some numbers here, but it's not important right now. But it was interesting to see how this pattern plays out. Like technically, this pattern can still, even if price does go up, right? It still can play out. Like it can still go down, and that the pattern fulfills the pattern rules, right? But if it crosses kind of above this level here, I mean this level here, then being this level here, then maybe you could say that the head and shoulders is not playing out. But that's one pattern there. Okay. The now if you trade wedges and pennants and flags, then you'll probably see what's going on here. The first one is what I call bullish consolidation, right? Which is where the market kind of rallies up and then kind of slows down and then sidesteps a bit for days or weeks or hours or whatever, and it kind of just does this for some time before it decides to break out to the upside, right? Generally, they break out. They usually at least do a test of the previous top, right? And then they'll do another sidestepping motion like this, but on a lower time frame, and then rally up again, right? So that's one possibility that could happen, right? Now, if it does do that, then I don't see how it could, go above this level here. Like I think 2110 is the absolute level they can go to, because if you look back here, you can see all this chart vibration, which is basically just a lot of bears and bulls just fighting it. They're just battling it out. So that's already just almost impossible resistance to get through, right? But you never know, right? But basically, we could see the break, but we could also see a reversal at that level too. So you got to be careful of that. Now, the other possibility that could happen also is that, and this is rare, this doesn't happen as often, but it does happen, which is the market kind of does this move like this. It comes down and then it kind of teases you a little bit, it goes back up, and you're thinking, okay, yep, we're going to see a break soon, but instead it just kind of breaks down below this channel here, and then basically all the people that had positioned themselves and placed stops around here got stopped out, right? And then straight after that, the market just continues up, right? So it's basically a false breakout. So that's one option. The other option is where we see it do the break as it is, but then it tends to flirt around quite a fair bit around here. It teases people, getting people to think that we're going to see the move up, but then all of a sudden it just continues. It actually goes down further. So that's something that could happen, but it doesn't happen as often, right? Majority of the time, if you got 10 of these patterns, most of the time there's a breakout, right? But something to keep an eye on. So, because what people do is when they see the break, because they're assuming, okay, well this is just a false break, we're going to see a reversal to the up. They'll move their stops, right? Their stops would have been here, and they'll be like, okay, well we'll move it down here. And as it goes a bit further, they're like, oh, okay, well maybe this is going a little bit further down. We'll move it down. You shouldn't be trading like that, but people do it. Okay. So that's something to be wary of. Now, there's the other pattern that could happen, which is very unlikely, but I just wanted to show you it because whilst we're talking about flags and pennants and all that stuff, might as well talk about this one, which is basically what call the ascending bearish flag or pennant pattern, I guess, where the market kind of does this and then it kind of goes up, breaks structure, and then it goes down like that, and it goes up and then it goes down, and then at some point it just kind of pushes through, and then it kind of just does this, bit of a retracement, and then bang, like that, and then followed by a reversal. Okay, that's unlikely to happen, but it has happened before. So I just thought I'd show you that, and a good example of that is right here. You can see that right here. This one did a similar move, right, where we got this. You had this move like this, right, down, so, and then up, down, up, down, and then breakout, right? This one doesn't go as high, but you can see what I'm trying to say, right? Like There's not specific measurements to time to that these are all equal or anything like that. So that's one pattern. That's another one that could play out. Okay. Now that's on the daily. Now I just want to show you the weekly also, because this is interesting as well. Now if you look at the weekly, right, we're clearly like starting to like head down, right? But you know, we're basically putting in lower highs, right? This is showing you lower highs. So you've got the market putting in a top, right? And then followed by a new structure low, okay? And then the market comes back up, right? So comes back up but fails to go cross above this high here. So you put in a lower high, right? Which signals potential trend change, okay? Because you've got all higher highs here, right? And higher lows, and all of a sudden you broken that. Now you put in a lower high. And then the next move was we would expect it to put in a lower low, which it did, okay? And then it continues back up, and then now it looks like it's put in another lower high, which we expect to see it to continue down again. So the next level of interest would be around at the minimum, the 1800 to 1830, 50s level. If it does continue on based on the trend, then we should see maybe possibly 1750 level being hit, and that could be in a very short time. So if you look at this move here, the one I showed you on the daily before, that was a week. This is a 2-week move. This candle here represents 1 week, and that's 1 week, so that's 2 weeks. This is so far 3, but once it starts to move, it's going to move very fast. So I just want something else on the monthly I want to show as well, which is this one here. Now the monthly is similar as well, but there's some. This one's I'm looking at this as kind of almost like a triple top. Okay, the market put in a top, right, and then put in a second top to confirm a double top. Okay, now you got a third top, a triple top, right, and then not only that, but it's put in a doji candle, right, followed by a continuation down. So that's generally a reversal signal. Okay, when you see candlesticks with this kind of formation, it's generally, most of the time, it's a reversal pattern signal. Okay, and once this candle, once the third candle is confirmed, generally you can enter at the on the fourth candle, or or wait for the retrace, or however you like to trade it. So yeah, so that's what's there happening now. There's also one more thing also which is interesting. If you look at the weekly, right? Now I showed this ages ago. You probably won't remember, but let me just see if it actually is okay. Yep. Okay. Just want to make sure I've got it all lined there. I have to make this a little bit more clearer. Make it green. Make it pink. No, it doesn't. Can't see it properly. Make it white, I guess. Okay. So if I zoom in, this is 2001, right? Now you can see that this one being I think it's the 50-day moving average, right? And the blue one being the 200-day moving average. Now every time we've done this kind of a depth cross in a way, right? Whenever we've seen this depth cross, it's generally signaled a big down move. Okay, I'll see if I can make that up clearer, make the line thicker. Okay, now this cross has only happened twice, right? In this, since 2000. Damn it, where are we? Okay, so white, make it there. Yeah, okay, cool. So you can see the cross here, yeah? See how we crossed, and then since then we made the down move. I'll probably show you on the weekly, it'll probably be easier to see. Where are we? Okay. So obviously on the weekly it will appear to be lower, right? So you looked at the daily, it would have been appear because the daily's mainly because the daily's the lower time frame basically. So if you went down to the 4 hour, you probably see it a lot earlier. But So what I want to show you is that. So you can see here on the weekly, as soon as we crossed, we pretty much went downhill from there. And then you see another cross here. We had a big fall in 2008, right? Now, this one doesn't seem like it's even anywhere close to it, right? Which is interesting because I'm seeing if it depends on what your rules are for your moving averages, okay? Some people will have different moving averages and they'll see different things, but this is what I see. But what I'll show you again is the daily, because, and I might not be using the moving averages properly because I don't really use them at all. So I thought I'd just put it on there because it was quite interesting to see. So, but you can see here, same thing. If you look at the daily chart, you can see these crosses here, right? And every time we've seen that cross, we've seen this big move down, right? And if you look back now, right, where we're still, we haven't really crossed it. We have crossed it twice, but it's been held up pretty well. So, but I don't think this is going to hold on much longer. And the volume speaks for it too. The volume has been pretty low. And basically what we're really waiting for is for more volume. Once the volume kicks in, and I mean the volume is in the institutions, the big banks and hedge fund players, all those guys will come in and start dumping. So this is going to be quite interesting, right? Now, one thing I just remembered is in terms of looking for patterns, I forgot one more thing. If you go down to the lower time frame, you can actually look for advanced patterns, right? Advanced patterns are basically when the pattern completes, you're looking for an entry right at the completion. Okay, so looking at this right now, I can see two patterns. Right, well, the first pattern is the cipher pattern. Right, and I'll just quickly measure that just to make sure I got it right. So, got the cipher pattern. Right, perfect. And that's usually a, there you go. Cipher pattern completes right there, right? So if the market does go back up, this is the level you'd look for a potential selling opportunity. Okay, that's the first pattern there, right? So this, like I said, there's heaps of different techniques to find these particular moves, right? The other pattern is there's a Gartley pattern, right, which basically completes at the same level as the cipher pattern. So that's good confluence to look for. But you've got the Gartley pattern there. Gartley pattern is slightly different to the thing, right? Another one there. And so they're good levels to look for selling opportunities. If you don't think the market's going to go up that high, there are patterns on the lower time frame. So you can look at, say, the 1 hour, and you can see already that there might be a cipher pattern as well, a smaller one on the 1 hour. Right. So again, I just want to draw it, make sure I've got it, showing you the right stuff. Oh shit. All right. So, damn it. There we go. All right. So we got. Yep, so right on the dot there, like literally right there. So you got cipher pattern. Now I don't really like this kind of cipher pattern. I won't get into why, but I don't really like this one. But you can see there you got a completion rate at 2076, right? Now I don't really like the look of that cipher pattern. So let me just see if I can find another one. Alright, so let's say we go down here. Alright, so, and like, you're using these patterns to predict what could happen, right? And I'll explain to you how and why that can be done very briefly. Right, so okay, good. That one's a lot better. Okay. Oh shit. Okay. Oh damn it. There we go. Okay, so you got a cipher pattern here, right? Not a very good one. actually it's under 61%, so you can technically move it up to the 88%. That's what, according to my rules, I can trade it up there. So you got a pattern there, right? So what's going to happen is, now going back to this head and shoulders pattern, right, that we saw before, the head and shoulders, right? If I scrunch this up a bit, and I'll quickly draw it, you'll see what I mean. So you had this head and shoulders I showed you earlier on, like that, and then that. I'm drawing really roughly, and then up you go, and down we go. So I said that we might still see a move to the upside. Now, if the market moves up, right, is it going to be a false break, or is it going to be a continuation to the upside? Or are we going to see a move up and then followed by the reversal? And but if that were the case, then where do we look to sell, right? Where's a good level that gives us a selling signal? And that's where you can look at these patterns or anything else on lower time frames and look for these moves. So we can safely say that if the market does go up there and does break this trend line, this little trend line here, right? Then this level here provides a really good selling opportunity, right? On top of that, you've got the moving averages showing you that we're starting to see this crack, right? This move to the downside. So it's either going to if it does roll over around this level, then it would be the highest probability would be around here, right? So that's an area to watch. But that gives you kind of an indication as to how you can combine. You don't just have to look at the head and shoulders. You're going to look at other things too to see, well, what other signals are showing me something similar. It's called building a case for entry. So that's the S&P, and I'll leave it at that. But hopefully that helps, and I'll speak to you guys soon. Cheers.